Hi folks, welcome back. Hope you are doing well. Today we have a lecture 9 of ICT A to Z beginner series. In this series I am going to show you the example of a breaker block, mitigation block and order block. Okay, so make sure you watch the previous lecture so you didn't confuse on this one, and make sure you subscribe our YouTube channel and join our Telegram channel, link in the description. So let's get started. So in the video of Lecture 7, I explained you order block, breaker block and mitigation block. I summarize here. To be valid breaker block, price must tap on POI, okay, where the liquidity has been taken on the higher time frame. Then price create an order block with a fair value gap, and then price tap on it and we will get in the trade. That is called an order block. For a breaker block, price take out the previous swing point liquidity, tap on the POI, market structure, then come back to that last up close candle, last down close candle, and then tap on it and we go like that. In mitigation block, price tap on the POI, give us the valid swing point and give a market structure shift, retest on a down close candle, and then we go. Let me show you example. We have Euro USD 1 hour time frame. Price take out the liquidity of 3 days, 4 days, okay, like this here, and tap on the higher time frame POI, that is fair value gap. Okay, after that price give us a market structure shift here. What is market structure shift? In the coming videos I will explain you. Okay, so price, what happened? Price come back. We have now many type of entries. We have order block entry, where we have a valid FVG, if you want to see here, a minor FVG. Okay, and the setup was happen in the kill zone hours, London, New York, right? Order block, fair value gap, the previous leg take the liquidity, tap on the FVG and downside liquidity. See? Okay. Next day, price come back. We have a breaker block. Why is breaker block? Why is not a mitigation block? Because price tap, liquidity, and then come back. Understand? Here is the target. Liquidity, here is the target. Okay, so this is the order block and this is the breaker block. Let me show you the example of mitigation block. Now as you seen here, break of the structure to the downside. Okay, price come back. We have order block and we have mitigation block. Price come, touch the liquidity. Okay, so here you see the 3 examples. When in coming futures, I will make videos on a 22 model and another ICT models. You will see these things. I will take trade on that. Okay, so don't be confused, just practice on daily basis on your chart. I hope you learned something from this video. Make sure you subscribe, and if you are new to our channel, make sure you subscribe the channel, and if you don't have any good broker, I will put the link in the description. And until next time, be safe.